What is a fixed asset? Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. Today we're talking about fixed assets. What are they? Now, this is quite a fundamental from an accounting and tax point of view. And the reason it's a fundamental is it's because something that will appear on your balance sheet. So check out the company accounts videos if you want to find out about how it all fits together in your accounts. But the balance sheet is basically showing you all the assets, the things that are making you money, and the liabilities which are costing you money. And today we're going to focus on the fixed asset element, which is at the top of a balance sheet, which is basically showing you all the assets, all the specific items that are actually helping you generate your income. Now, in a property business, it's pretty clear what some of those are going to be. But let's just cover the whole topic of fixed assets so that we can actually understand what may or may not fit within this area. So let's start with the very basics of what is a fixed asset. Well, a fixed asset is something that is going to generate you income within your business over a long period of time. So if you just buy any old thing and then sell it or do something with it, then that's not going to be a long-term asset. It's just going to be something you're doing business with. Whereas if you're buying a computer or a property, then you're going to hold on to that computer probably for maybe 3 years, 4 years, maybe 5 or 6 if you can push it that far, or a property where you may be holding it for 5, 10, 20, 30 years. Now, these are fixed assets. These are things that you are going to hold on to for a long time. And the reason it's so significant is because these are not things you're going to buy and sell, which would fall within your profit and loss. These are things on your balance sheet, and the tax rules are slightly different. Some great examples of fixed assets would include, so we've got for this, we are a property channel. So this is going to be things like freehold property or investment property. An investment property could be a flat, a freehold flat, a leasehold flat. It could be a building, it could be a commercial building, it could be a mixed use building. So any type of building which you are holding on to and you're not trading, so it's not a flip, would fall within a fixed asset. Now, other areas we might consider are things like our computer equipment. So we're talking about tablets, phones, cameras, laptops, computers, printers, all these sorts of things that we use in our business on a day-to-day basis. Other areas we might consider are things which would fall within office equipment or fixtures and fittings. And this might be things like your desk or your shelves in your home office. And as property investors, we may have certain equipment. You might have damp monitors, you might have laser measurers and things like this, which don't cost £10, £20. They're costing £50, £100, £200. So all of these sorts of equipment. And if you're doing any of the work yourselves or you're doing bits and pieces of maintenance, you might have other kit. So you might have toolboxes, you might have ladders, you might have all these things which they don't cost a tiny bit of money, and you're going to be keeping using them in your business for a period of time. So they would fall within the category of fixed assets. Now, the accounting for a fixed asset is we're going to debit the balance sheet, the fixed asset code. And this puts this asset, so anything from a computer to a property, onto the balance sheet. And then the credit is going to always be the bank account generally, because we've just paid for it. So it'd be reducing our cash or money at the bank, but we're increasing the assets we have in the business. So that covers off how we'd put it onto a balance sheet. Now, what are the implications? Because the next question, a lot of people, well, do I get tax relief? How does it all fit together? Now, in your accounts, we have something called depreciation. And this is basically reducing the value of that asset over a period of time. Check out the separate video on depreciation, which covers what it is, how it fits together, what the options are, as there's a few different things to consider with this side of things. Now, depreciation is not actually allowable for tax purposes. So we have a separate terminology which you also need to be aware of, which is called capital allowances. Now, capital allowances are basically the tax equivalent to depreciation. So when we do your tax calculations, any depreciation that has been taken off your asset in your profit and loss will be removed from your tax calculation. So as you can imagine, all of a sudden this means whatever profits you had or losses, they've just gone up to maybe a profit or a bigger profit. But that doesn't mean for these things that you're buying, things like computers or desks or the day-to-day sort of assets that you would buy, it doesn't mean you're not going to get any tax relief. So what you do get is something called capital allowances. And there's quite a lot to do with capital allowances. So again, check out the separate video on capital allowances because we cover what that is, how it fits together, and also all the different elements that you can be claiming, including things like the annual investment allowance. And also check out the video on the super deduction, which is currently in place up to March 2023. Some additional points to mention on our video specifically on fixed assets today is that there are some fixed assets that do not depreciate in value. So let's think of something like land, which is land. It's there forever, it's an area, it's not going to lose value. So therefore we wouldn't look at depreciating that asset because it is what it is and it's probably not going to change unless something like contamination happens on it. So this means that this is just going to sit on your balance sheet as that figure indefinitely, ultimately. Another area to mention is things like stock. So for a flip, if you're buying a property to then sell that property, this would not fall within an asset because an asset's about keeping something for the longer term. Whereas if you're buying something and then selling it, this would be a more trading asset. So that would go through as a stock item, a current asset, and it would end up going through your profit and loss a lot quicker than a fixed asset, which is there for the longer term. A final aspect of fixed assets is to talk about something called intangible assets. Now, intangible assets are things that are an asset, but they're not physically here. So the best one I can think of to mention here is things like a website where it's adding value to the business. It's not just a shop front. You might have it doing lead generation or investor generation, or it might be bringing in tenants. It's got various different functionality, which is meaning it's not just an expense in the profit and loss. It's something that's going to add value to your business for a long period of time, or at least a couple of years for that type of asset. So this is what's known as an intangible asset. So it is still treated in a similar sort of way. So rather than just sitting in fixed assets, it'll sit in intangible assets. And it'll sit in a similar sort of place on your balance sheet at the top of the page if you ever look at one. The accounting for this is exactly the same. You're going to debit your fixed asset, your intangible asset now, and you're going to credit your bank account or loan account or however you've paid it to reduce the cash element of it. So that gets it on there. Now for these, you still can get some capital allowances. So again, this will be covered in how it fits together. And also you can depreciate it. However, rather than calling it depreciation, it's something called amortization. And it's just a similar sort of thing, it's just a different word how we treat it within the accounting convention. Within our property company, an intangible could be something like you've bought a brand, you've got something that is worth quite a lot of money, and you've got the value, you've paid for it, so you know what that value is to do with. But it's just something to bear in mind and be aware of, because as we develop our businesses, you don't know what direction it's going to take. But there will be things that are sitting in our fixed asset, whether it be property or other sort of assets, and there may be intangible assets that sit within our business that have some value that we can, again, be showing our business has that value and also getting the tax relief as we move forward with our businesses. Hopefully today you've discovered what a fixed asset is and what it means in your business. Please like the video and do subscribe to the channel. If you have any questions, please do leave a comment. If you don't know if something is a fixed asset, then please do ask the question. Let's make tax less taxing.